Video. Today we are going to review what happened at Road to Payout Day 8. I think it's Day 8. So let's get straight into it. Today was a fire day. We finally broke the losing strategy that we had this week. So let's start from the economic calendar. First, today is Thursday. As you can see, we only have 830 unemployment claims, only one red folder, which is very nice. Price action should be good today, as it was, which is why we won. So I took two trades. One was underfunded, and then the second one, I wasn't at home, so I executed it from my phone, and the only logged in account that I had on my phone was the 10k EUL. So I went with that, and I executed a trade there, and it hit 3R, which is very nice. And then the first trade that I took, I didn't execute it on my EUL, which is my mistake. I don't even know why I didn't do that. But from now on, I have a plan, which I'm going to tell you closer to the end of the episode, where I'm going to tell you exactly what my plan is for the future for this month basically. So let's start with the first trade. So right here we have Asia, and I see price accumulating prior to close of the Asia session. Then, as you can see, so this is the accumulation. After Asia closes, we get a sweep down below. This is two confluences. The first one, we swept Asia low and we closed back in the range, which is very high probability when that happens in terms of it going up. Then also this is an AMD. We have accumulation, manipulation, and then the next should go distribution. As you can see, very beautiful price action. So price then after that goes up and closes above the highs right here, which is for me breakout structure, which is my entry for this model. This retrace back to the 5-minute fair value. What's your point of interest in terms of adding more position to the more size to the position? Also, my stop loss was just below the bodies. I wanted to keep it a bit larger, even though the real stop loss where I would put it was below the 5-minute fair value gap, because it should hold price if it wants to go up. In terms of targets, what we had is obvious buy sell liquidity. So we had this 1 hour buy side right here, so I'm gonna mark that out. And then so we had 1 hour buy side, and we had 1 hour buy side as well here. This was even the 4 hour buy side, but we're gonna keep it like this. Okay, so we have liquidity to the upside. We also have Asia high, which is very nice, and this is a very clean entry. I was really confident in this one, and I'm sad that I couldn't post it in Discord. My bad, it won't happen again. But yeah, very clean trade. I aim for 1 to 1.5 because that's what I need to do with the funded account. I cannot get I have to put the consistency rule in my mind, which is why I didn't execute for a higher RR. That comes with my plan that I'll tell you after. So if you targeted any of these targets on the upside, you would have made a lot more with a potential of up to 6R if you took the last target of mine. So yeah, this was the first trade, very A++ trade. And then let me go to the second one. The second one, I executed on this chart because this is the Think Markets chart, which is my Think Capital account. I risked 1% on this one and I made 3%. So what I was looking at is I had marked out, we have relative equal highs right here, as you can see on London highs. So these are relative equal highs, and then we have London low right here. So what I was looking at is if we can, so we had our trade for Asia session, and then after that we have London session, and my plan was if we are going to go up, we have to sweep London low, then give me a setup. If we are going to go down, we have to sweep London high, then give me a setup. As you can see, both of these happened. We first went down, swept London low, went up, then we swept London high, and then went down. So session liquidities are pretty OP if you ask me. So let me get through this. I had set my alerts, so I wasn't at home. I was on my phone when I got the alert, so I waited. And right on the next candle, as you can see, after the sweep, we swept out, we actually inversed this 5-minute fair value gap. We inversed it. That was my entry point. I think I got, okay, I actually have it all marked out. I just remembered that. So let me go here and then here. Yeah, I marked it out here. Yeah, so this was my actual entry point and this was my actual trade. So as you can see, we sweep out London low right here. We have relative equal highs above here. Don't worry, this is a little bit wrong timing put here. It should end at 5. It's up to the indicator, so it should end here. Let me put this vertical line so that you guys know. So this is when our London session was ending. So we had these relative equal highs right here, which was my target, and it was really nice. So what I was saying is, oh yeah, let me just go over one more thing. As you can see, this right here, that we in the last trade, this was also a third confluence, which was the failure swing. Okay, that's also, I have to mention it. And then let's go back to this trade. So we take out London low with news, which is nice. We news basically manipulated. So this is also a failure swing and a sweep of liquidity. So unmarked is failure swing, and after the failure swing, we get price inverses a fair value gap. That's my cue for entry. Since it was news and everything, I didn't want to put my stop something like this below the fair value gap. I wanted it to be a bit larger, and I saw the opportunity to put my stop below these bodies. Now I didn't want to put it just below the bodies because I understood that this candle, this very candle, this is key about placing your stop loss. If you want to not get stopped out in these cases, this right here should be a good stop in most of the times. But if you want to be secure, because we are in a volatile time because news just happened, you have to put your stop at the low of the candle that gave the inversion or below it. So the safest stop would be just below the candle that gave the inversion. In my case, my stop loss was just at the low of the candle, as you can see, a little bit below. As you can see, sorry, as you can see, this is the candle that gave the inverse. So yeah, this was my entry. I think a bit like this. Yeah, as soon as this candle closed, I entered on this one. This was my entry that I got, the fill. Stop was below this, and then the target was meant to be 3R, but since I got a little bit worse entry and I just left my phone, I didn't realize that my entry is actually not 3R, but it should have been like this. But on the day, I'll show you that right now. On the day, I actually made 3.35% or something like that. We'll see now. Let me get back to this until this loads. So that was my entry, this was my stop, this was my target. These are relative equal highs, they were really clean. And yeah, as you can see, we did this whole range of 1 to 3 in one candle, which is very nice, and it wasn't even news, it was after news. So this is really nice volatility and everything. We did very good today. We finally broke out the losing streak, and just with these two trades, we made back in terms of percentages. On if I'm looking at all my accounts, we made back every single loss. So we are in profit on the week right now. If you look at everything, like every single account I have. So let me just go through this real fast. Yeah, 3.35% right here, as you can see. I was in a bit of a drawdown, but we are now good. We are coming back from this. So yeah, that's it. So about the plan, I'm done with the review. About the plan goes like this. I'm trading my funded, and on my funded I can take a trade with, for example, like this one on Asia, this one. And what I can do is, if I have a clear target, for example Asia high in this case, I can aim for higher RR, but then this will be the only trade I take if it hits take profit, because I don't want to get over the consistency rule if I want to get a payout as soon as I can. Then if it loses, I can freely trade London session as well. Okay, so I don't know what is with my voice. Wow. Damn. Okay, so I can aim for higher R if I want to be done with one trade, or I can do like this. If I'm not sure in the target, I can do 1.5 and then I can trade London as well for the second trade. Yeah, and then in terms of evals, what I want to say is I'm going to trade 1% risk on my evals, and what I'm going to do is where I would exit normally on the funded account, for example here, let's say that this was my first target and I would exit here. I would put my stop loss at break even at that point and let the rest of the position run. So I'm going to try and get as much RR as possible from my trades with evals, because I have no point in taking small wins and everything, because I want to pass the eval fast. So that's what I'm going to do in the future. So I'm going to take the same trades both on my funded and on my eval. The only difference is that on the eval I'm risking 1%, and I'm trying to catch more RR in trades so that I ensure to pass the account fast. So yeah, that's basically it. That's pretty damn good if you ask me. We kind of took long to explain this episode, but I hope you guys enjoyed it and I hope you learned something. And I'm sorry for my voice, but yeah, we are getting better and it's showing, and I'm showing everything, documenting everything, so you're gonna see how I rise and how my life changes with this shit. So thank you guys for watching, and I hope you enjoyed, and see you in the next one.